Good morning. To explain Willett Advisors, Stephen manages Mike Bloomberg's personal and philanthropic assets. That's what Willett Advisors. And his other big thing was, and it was said of him by Joe Biden when he was complimenting Obama, that Osama bin Laden is dead and GM is alive. And this is the person that made it happen. So, Stephen, congratulations on doing that.
That's overly generous, but thank you. But I'll take it.
Yeah.
My mother would have liked it.
Yeah. Well, I'm softening you up for some really tough questions about your New York Times piece. Stephen wrote a piece that created quite a stir on how growth is slowing everywhere, Europe, China, and even here. We'll get to here. But I wanted to start in Europe. We can take a tour in about 10 minutes without the good food, without the croissants. But let's tour Europe. And the U.S. did a lot better coming out of the financial crisis than Europe did. Tell us why.
Well, I think first, Margaret, maybe I'll just say that one of the overarching themes of the piece was the importance of government in either making the problems worse or making the problems better. And we can talk about, and I think as we go through the various parts of the world, we'll talk about the role of government, and where you started is probably a good place to start, because the difference between the U.S. and Europe in terms of our response to the financial crisis was that we acted much more aggressively in a number of ways. First, for example, to recapitalize our banks, to make sure that they were safe and had enough equity and capital to be able to function. We made sure that happened early. Secondly, we had a much more aggressive monetary policy in terms of stimulus and quantitative easing, low interest rates, some of which is controversial, but I personally think that our Fed did a fantastic job. And the Europeans were much more restrained and kind of delayed and didn't really move as fast as they should have moved on a number of these, so they've had a much slower recovery. And then the other, of course, the biggest structural difference between us and Europe is that we are one country with 50 states, and there are 26 or 28 countries sort of vaguely connected to each other. And so it is a very dysfunctional place in terms of government policy, in terms of a lot of regulatory stuff. You know, people tend to think that it's all about either what the central bank does or what the budget deficit looks like, i.e. whether it's about austerity, whether it's about monetary policy. But there's really a third piece to economic policy, which is structural reform, which is, can you do business? Can you hire people? Can you fire people? Can you build a new plant? Can you close a plant? What kind of price regulations are there? And Europe is so far behind us in terms of modernizing their regulatory apparatus that it really, I think, has had a major negative effect on their growth.
So in the U.S., the old saw, I'm from the government and I'm here to help, is actually true?
Well, I think it's true everywhere, or it should be true everywhere. I think.
But it isn't true everywhere, and lots of times it's true here.
Well, but what is true and what's not true? What's true is that there's no modern economy that can function well without a robust government sector doing things that it should do and doing them well. I think what you're implying is that government often doesn't do it well, and part of the theme of my piece is that one of the reasons why the recovery is so slow is because governments around the world, for very different reasons, have all done a bad job, basically, have not done what they're supposed to do. And so if you look at the U.S., I would give the Fed like an A+ for the job it did in both getting us out of the crisis and keeping us on a reasonable growth trajectory. I would give the Congress an F for just terrible budgetary policies. And I'm not talking even just about whether the deficit should be bigger, the deficit should be smaller. But what is important is really also how the money is spent. And so as we've gone into this austerity mentality in the U.S., we've cut all the wrong things. We've cut things like education and research and development and infrastructure and all the things that would actually make our economy grow faster. We've cut those, and we've done really nothing to deal with the rate of growth of spending in a lot of the so-called entitlements programs, which are important, but where there needs to be some reforms.
So before we leave Europe and go to China, where the food isn't quite as good,
Depends what you like. Some people like Chinese food.
Not in China.
That's true.
So euro. I wore my bracelet with, I think, a euro here somewhere. everyone will be asked this question today. What happens on Brexit?
Well, we were just talking about that in the green room. Look, I'm sitting here in Washington, so what do I know? But if you
No, you're here, so you know a lot.
Okay. I guess so, right, that's the theory. Look, honestly, I don't know that anybody really knows. If you look at things like the betting markets, which those of us who are creatures of markets like to look at, and a kind of wisdom of the crowds exercise is what do people think will happen? What are they putting their actual money down, betting on will happen? The probability is about 60, 70, 60, 65% that Britain will stay in. Britain just did a bond offering yesterday that was done at a very low interest rate, which the market took as another sign that investors believe that Britain will stay in. So I think if you were betting today, you would say that. But as we were talking about just a few minutes ago, we are kind of one terrorist act, one migration problem away from perhaps the British mood shifting in a negative way, and we have till June 23rd. So I think all the voices of reason are doing everything they can to get this to come out the right way. But just like our elections here, which have come out in some strange ways, you really don't know.
Yeah, I hope we have time to get to that.
Sure, why not?
So China, before we get there. Some people would have us believe that China still has this big boot on the neck of America, but the growth is slowing there. Richard Vague is in the audience. He's an expert on Chinese debt, and from reading you're pretty good on it as well. And their lack of transparency. Tell us about China's growth and the effect it will have here.
Well, I'll say a few things. First of all, unlike the governments in Europe and in the U.S., which are which are in this sort of anti-government mindset and very restrained, the Chinese government is not afraid to act. I mean, they go about their business and they do it. The problem is they don't really know how to do some of the things they're trying to do. For example, they have been liberalizing their stock markets and all their financial markets, but they don't really know how to manage markets. And so when stocks were depressed, they told all the Chinese to go out and buy stocks, and so stocks roared up, and then they told all the Chinese to stop buying stocks, and so they all kind of collapsed. And it's really not, they're in a learning process, shall we say. The second problem with China, which you alluded to, is that it's very opaque. Nobody really knows what's going on there. Nobody believes, including me, the economic statistics. And so when you don't trust what you're being told, you tend to assume the worst. And that's part of why investors and commentators and policy people have always been very nervous about China. Personally, I think China is not growing at the 6.7% number they say. I think they're probably growing somewhere in the 3 or 4%. I would say in the last month or so, I think the sort of sensibility of the rest of the world about China has moved slightly to the more positive side of actually believing China is not in some kind of free fall and that it's going to continue to muddle along with reasonable positive growth, more growth than we have here. And that's my view of China. We are heavily invested in China. We do believe that China is a great success story and will continue to be a great success story. There is the question of the debt, which is high. It is not ridiculously high, and we don't even, again, know exactly what it is. It's what we call in investing like a tail risk. It's something that we can't really quantify the risk of it happening. If it does happen, in other words, some kind of a debt collapse, it would be really terrible. But I think the odds are against it happening myself. I think they have enough assets and enough momentum in their economy that they can manage their way through it.
So on austerity as a theory of fixing things, you tighten your belt and the elites or the wealthy or whatever will be looked after. As a theory of government, has that worked?
Austerity?
Yes.
Look, it is important in the fullness of time for governments not to live beyond their means. And there's no question that when you look out a distance...
But it's who suffers from government not living beyond its means?
But as I said, it depends. There's two separate issues, right? One issue is in terms of the size of the spending pie, or the size of the overall budget is what's too big, what's too small, the deficit. And then the second is what should the components be and what kind of spending should we have? So in terms of the overall size of the deficit and where it's headed, right now our deficit is quite manageable. It's below 3% of GDP, but because of the aging population, of which unfortunately all of us are part of that, because of the aging population and the costs of Medicare, Social Security, and so on, there's no doubt that down the road somewhere we will have a lot of debt, probably more than we should have. And that's an argument for trying to keep deficits at some reasonable level. On the other side of the coin is the fact that our deficit has come down enormously, our economy is weak, interest rates are low, the federal government can borrow 30-year money at a little over 3%, which is like really low, right? And so why would we not at this moment in time, when we have crumbling infrastructure and we have education system issues, when we have R&D issues, why would the government not go and spend another, pick your number, $100 billion on some of these critical needs to try to get the economy growing faster? So that's the yin and the yang of it, and I think a lot of us believe that in the short run, government should be doing more to try to get the economy going by spending intelligently, but in the long run, we have to be aware of the fact that the debt burden is getting higher.
So at the end of The Big Short, Steve Carroll says, everybody was in on it, and nobody really wanted the housing bubble or the lending to stop. And that's why we got where we were. And that in the end, the banks and the financiers were protected, but not the little people were protected. Which gets me back to the United States, and which gets me to our current, the trust in government factor. You had a beautiful chart in your piece, and the arrows, or what do you call them, the axes, were down. There were little upticks here and there, but mostly we're way, way down in trust in government. So I'm from the government, and I'm here to help you doesn't work for a lot of people.
Yeah, it's a real problem. Look, the anti-government, so look, I guess my sort of view of the whole thing is that, and this does relate to the politics of what's going on at the moment, the typical working class American has had a really rough time from the standpoint of incomes over a long period of time. Median family incomes today, when you adjust for inflation, are about 7% lower than they were in 2000. So in the last 16 years, after you adjust for inflation, incomes have been going down. And so people are really unhappy. And they should be unhappy, and they're right to be unhappy. And that reflects itself in our politics, like some of the primary results that we've seen. But it also reflects itself in people's view of government, because they do look at government, or they used to look at government as basically part of what was going to help them, that the government was there to help them. And now here we are in 2016, and so many Americans are worse off. So they say, well, okay, the government didn't help me, so let's get rid of the government, let's try it some other way. And so all the people who argue less government is better, let's just unleash the free enterprise system, whatever, have been sort of gaining political currency because they have an alternative that people think might work, but they think that the traditional alternative of the government actually stepping in isn't working.
Right. So we have a traditional now Speaker of the House, and yet we don't.
Well, we don't really have a traditional Speaker of the House. I mean, look, he's a good
well,
guy.
compared to what the Freedom Caucus would want, we are now back with some sort of regular order in the Congress.
Yes and no. I mean, if you look, I like Paul Ryan. I worked with him on the auto bailout. We had a couple plants in his district up in Wisconsin. He's a really good guy. He's trying to do the right thing. But if you actually read his policy proposals when he was budget chairman, they are as draconian in terms of cutting the size of government and cutting spending, and cutting, in fact, the stuff that would help the little people that you have talked about so much, and cutting taxes for people like me who don't deserve a tax cut. He's well out on the right fringe in terms of what he actually left to his own devices would do. Is he all the way where the Freedom Caucus is? No. But, okay, fine, they're a little further up. But he's way out there. And so it's going to be very interesting to see, regardless of who's president and all the rest of it, how next year, whether we can make any progress on these issues, and whether all the people who have very strongly held ideological views, not just Paul Ryan, but people on the left as well, are going to be able to compromise and get something done, because we haven't gotten anything done in a long time. And sorry to interrupt, but one of the reasons also that maybe this is like a circular thing, but people don't trust government. So people like the Freedom Caucus are there. So government has literally stopped doing anything. If you look at the number of bills that Congress passes, it's like at an all-time low. And so then people say, well, government doesn't do anything, so they're all useless, we should get rid of them. And so it's become this sort of downward spiral for government as a positive force in the eyes of most Americans.
I was just looking for a glimmer of hope so that you're not Dr. Doom the entire time by looking to, the prospect of maybe Paul Ryan getting hold of things. But we don't have a budget. We don't have tax reform. Rand Paul took a chainsaw to the tax code, but it hasn't been prominent in this election so far.
Well, this election so far really, especially on the Republican side, I don't say that as a partisan comment, really hasn't been about issues. I think Bernie Sanders has been very clear about some of his issues. I think Hillary Clinton has put out a lot of policy papers, which nobody's written more than 5 words about. And on the Republican side, it's been more emotion than actual specifics. So yeah, we don't really have those yet. But we will, I think, in the fullness of time. And I think it's going to, as I say, be really interesting. We're going to have divided government next year, right? You're not going to have one party control all the House, the Senate, and the presidency with filibuster-proof majorities. This is not going to happen. So there's going to have to be compromise to get something done. And it's going to be really interesting, again, to see whether people who have pretty extremely divided views are going to be willing to compromise or not.
So Donald Trump swept the primaries last night, and it looks like he'll be the nominee. Is this an expression of what you've been talking about, slowing growth, the wealthy are doing well and getting their tax breaks? I should be unhappy. Fortunately, I'm still happy despite all this going on. But the middle class and the working class aren't happy with what's been going on in the country. And so this vessel comes along, and he's doing astonishingly well. Yeah, look,
the phenomenon of Donald Trump is not inexplicable. And again, the political scientists, the pollsters have all shown that his largest base of support is among white, middle-aged, working-class males. And that is the demographic that has suffered the most.
I like to blame men for everything, so this fits my view.
Fair enough. I'll take my share of the blame. And that is the group that has probably suffered the most. Look, if in 2004, a manufacturing worker in the state of Michigan made $27 an hour. Today, after you adjust for inflation, a manufacturing worker in the state of Michigan makes $21 an hour. So they've taken over a 20% inflation-adjusted pay cut. The number of manufacturing jobs is also lower than it was then. So why is it such a surprise to see the way the Michigan primary voters voted? They're unhappy, and they have right to be unhappy. And when Trump bashes Mexico, we can get to China, but he bashes China too. But when he bashes those two countries, because on the trade side, put aside the ethnic stuff, but on the trade side, when he bashes those countries, it's not irrational. Trade agreements have meant a huge benefit to the U.S. as a whole. All of us probably in this room have been huge beneficiaries of buying less expensive goods that come from those places. But there are people who've gotten the short end of the stick, and there's heavily people in our manufacturing sector, which has really been decimated. And we shouldn't kid ourselves about that. And so when he talks about 35% tariffs on Mexico, or he's going to have new trade deals with China, we don't even have a trade deal with China. He doesn't seem to know that. But nonetheless, he wants to have a new one. Yes, he wants to have a new one. But what he's saying, people do sort of understand. They can connect those dots. They understand that imports from China, imports from Mexico have benefited, again, a lot of us and cost a number of jobs.
So, in our 40 seconds remaining, you're Secretary of Treasury in a Trump or Clinton administration. Let me just fast forward here. What would you do to speed up growth and make the middle class our cover story in The Atlantic this month? What would you do?
I would try to see if it's I don't know if I'm a Republican or a Democrat in your scenario, but whichever I am, I would try to see if I could get business done with the other side.
I would say I don't think you're going to be chosen in the Trump administration.
Whatever.
It's a bipartisan conference.
Look, the point is that I would try to get business done. I would try to sit down. I do think Paul Ryan wants to get business done, even though I do think he's got a strongly ideological position. I would try to sit down and compromise. We need tax reform desperately. We haven't had tax reform in 30 years, and Trump is right. The tax code is riddled with loopholes. So we on the liberal side need to be willing to compromise on things like corporate tax reform, and the people on the other side need to be willing to compromise on some of our issues. So I would really try hard for tax reform, and I would try hard for some spending on things like infrastructure, R&D, and education that I think could get the country growing a bit faster.
Secretary Rattner, I thank you.
Thank you.